Hi there traders and welcome. Hope you're all doing well. Now what I've just put together for you is part 2 of a follow-up video for our Dogecoin trade. And our original post was, could this be the next social media runner? So we'll just see whether it was or wasn't. And what I'm also going to do is step through with you is the price action for the exits. I think many people just discard the exits and hope for the best, but we really want to just walk through, touch on the most important key parts and what to look out for. So stick around after the break and we'll chat to you then. Hi there traders and welcome back. So I thought I'd put out this follow-up video to our original video on Dogecoin and the euphoria that's surrounding it. It's got a bit of a cult following, as we mentioned, and it could really get a bit of a move on with all the Twitter ramping that's been going on of late. So I thought it'd be, fairly timely just to have a bit of a chat about it and what the price action was saying to us originally and what actually transpired and why it's actually important to follow the price action rather than the hype. If things are going to kick off, great, it's nice and easy to trade, but if things are not going to kick off like you expect and that social media ramping up just starts to fade, then you've got to realize where you want to get out and not get caught when it flushes straight back down again. So as we mentioned, there may or may not be a bit of a use case for Dogecoin, or it may just be the cult following that's been ramping it up. So we've got the daily chart, and this was, when we were talking about it, it hadn't quite broken this level here. It hadn't produced this full candle. It was just slightly green, just below that level. So we were discussing the reasoning behind why it was a good buying opportunity. And as you can see, once it broke above there and it's building some higher lows, really starting to drag in some buys, and you know that because it's got that following, there's a good opportunity that it's going to really start to take off. It had a bit of a pullback and really started to kick on into new highs through that, was it 0.0735 digit. So you can see it, once it started to kick on, there was some selling started to come in. Once it pushed through the highs, it started to fade off. So we'll drill down on the hourly chart again, and we'll look at the potential perfect scenario where you could have got in and what the price action was telling you. And on the flip side, why you should start to get out. Okay, so let's just go over to the 1 hourly chart now. Okay, so here is the price action from the 1 hourly. And we were looking at this zone here. We were looking at the price action that's actually pushed up. We started to fade back down again, and it started to hold this inside level, and we got a little thrust up again as buyers start to ramp again. But then we get some more selling coming in. So it's important to notice, if you get that secondary wave of selling coming in, you're going to do one of two things. If it's got enough oomph from buyers and there's enough people on the sidelines willing to get back in again and willing to ramp it and buy price up and support it, then you're going to get these high lows build, which is quite nice. Now, if it doesn't, and there's more selling pressure than buying pressure, then you would expect that it's going to start attacking these most recent high low and start to fade right off again. And it could potentially go back to, back to these lows or make a new low and take a lot more time to work out. As it played out, it started to hold, and we got this ramp back up into that previous sort of minor lower high zone, which we're looking at and which we discussed in the first video. So if you haven't checked out the first video, go to our YouTube site, have a bit of a look through, and then you'll understand a bit more what we're talking about. So once it started to pick up, you've got that consolidation just below the level. We started to ramp up, and it's important to note that we were picking up off a higher level. Okay, you got the lows in here, that was rejected, consolidation, you got that lift, pushing back into the lows, but it started to consolidate at a higher level before we started to ramp back up again. And I really do like this push up. I mean, you could have bought on the break, but there is that opportunity where it fades at this high and we start to get that double top and we start to attack back on those higher lows and really push lower. What I ideally like to see, you can see this contraction. By contraction, we meaning lower highs and higher lows. And that for me is a prime type of a setup. Okay, you can see contraction in price. Buyers are still stepping up to the plate. Sellers are coming in. Sooner or later, one side's going to win out over the other, whether it's buyers or sellers. In this case, it was the buyers. And we could see it start to ramp up, and you've got a clear buy entry. You could have boxed it up just through here on that lift, or you could have boxed it up a little bit later in that secondary phase there. By box it up, I mean buy the break of the top side, where your risk is obviously below. You're buying with the trend, you're buying with momentum, and with price action as it gets ramped back up again. So, and you're leaning on that social media hype that we were talking about originally. Okay, so that's all great. It worked out fantastic. It started to lift. We started to push through these highs. So it was about here when we had to get, you're going to be a bit concerned once you start pressing up through highs and you reject them and you come back below the level. Okay, you can see that ramp back up through, back below the level. And once you start to push up again, if it's going to be strong, it should just take out that high and continue on its way up to new highs. But instead, we've got this contraction again, and it's starting to hold some lower highs. Okay, so what we're seeing is sellers stepping in at a lower level than this high. Okay, then they started to step in through here as well, through this zone. So it's important to note that, okay, we've got into something for the reasoning behind that. We know that there's a big following. We know that it's got a bit of a cult following. We know that this thing could get ramped up quite easily, and it did. It got ramped up, but it faded fairly quickly, or just as quick. So for whatever reason, buyers past this level just weren't happy enough to, keep supporting that momentum up. And then what you had is sellers started to jump back in. Anyone that's been holding it for a while, selling back in, and really they're not waiting for it to get into new highs. They're selling into that strength, or selling into those lower highs, creating those lower highs, and then buyers are nowhere to be seen, and the market starts to fall apart. So you really got to notice what's happening. So it's pretty much, if you can look at it through here, you can see contraction, the same as what we're looking at before, the reasoning why we got in, but it's also the reason why we get out. Okay, so you know that if we can't hold, it's a quite obvious level, if we can't hold through here, then the market could fade, or you can even move it up. By the time you got to somewhere off this lower high and you start to break through this zone, it's around 70.07648. This little low through here, pretty much the low of that box, then there's a good chance that we're going to get some sort of contraction. We're going to start to, this trend up here starting to break. They want out, we want out as quick as possible, and start to assess from the sidelines rather than be in the trade, monitoring it and just watching your gains evaporate. And knowing that, like I mentioned just before, whether or not this has actually got a legitimate use case. I mean, people talk up Bitcoin has, Ethereum has, maybe Ripple has, but whether Dogecoin is just that phenomenon, it's that social media, people are buying it up on the back of, social media ramping, whether it's actually got a use case. If it hasn't, then there's a good chance it's going to get knocked back down again. So we would rather be, at times like this, we're looking at the price action to get in, but we're looking at that price action also on the reasoning why we should get out. I mean, there's always the chance if this starts to consolidate, we start to get, like what we may be starting to do now, we got that push back down, back basically to where we got in. Now there is that opportunity now that it's still finding a bit of a base here, and we're starting to consolidate sideways or range trading rather than we're in pullback mode. So the range trading, what we'd be looking for from here, from the price action wise, don't mind it flushing out. We want to see it start to lift. You want to see it start to lift, create that uncertainty from sellers, whether they should get out, we should wait for higher prices, and also that uncertainty from buyers, whether, okay, we're starting to ramp up again. And this is all part of, one push, pull back, another push, pull back, holding a higher level, a major higher level, and we're starting to go again. Okay, so that's ideally the price action which we'll be looking for now. A bit of a push up through most recent lower highs, just in here, or outside that range, pull back into the range. If it starts to hold a higher level just within that range, or retest the breakout level, then it's worth jumping in and following it back up along with the price action. But just being certain that if it does start to ramp up and you start to fade again, you're looking at the price action for a reason to get out. Okay, so any crack in price action, you want to jump straight back out again. So in review of all that, what we're always trying to do is trade what we see. We're not trying to trade what we think or trade from the hype and try to make a big buck. What we're always trying to do is follow the price action and trade exactly what we see. We're to get in when the price action tells us to, and we're going to get out also when the price action tells us to. Well, we hope you enjoyed that, traders, and thanks very much for listening. Remember, if you did like our video, please subscribe to our YouTube channel for more great content, and sign up to the website to get access to all our premium videos for free. Speak to you again soon.